Now, the Federal Reserve raised its interest rates by a quarter of a percentage point on Wednesday. The Fed chair has also said that the economy still needed to slow and the labour market needs to weaken for inflation to credibly return to the US central banks. That's the 2% target, Parmeshwar, they're talking about.
Right, Divya, the hike, though, the Fed's 11th in its last 12 meetings, set the benchmark overnight interest rate in the 5.25% to 5.50% range, a level last seen just prior to the 2007 housing market crash and which has not been consistently exceeded for about 22 years. Sakshi Bajaj reports.
Since early last year, the FOMC has significantly tightened the stance of monetary policy. Today, we took another step by raising our policy interest rate a quarter percentage point, and we are continuing to reduce our securities holdings at a brisk pace. We've covered a lot of ground, and the full effects of our tightening have yet to be felt.
The US Federal Reserve has raised the benchmark rates by another 25 basis points and kept the door open for more, saying that a future rate hike will be data dependent. The Federal Open Market Committee raised the federal fund rates in the range of 5.25% to 5.5%. Now remember, this marks the 11th hike to come out of the Federal Reserve over the course of the last 12 policy meetings. This is just the level seen last, of course, prior to the 2007 housing market crash and has not been consistently exceeded for about 22 years. So the highest rate really in the last 22 years. The US Fed's decision on federal fund rates has a significant impact on emerging markets such as India. Now, Fed's move on interest rates strongly influence the foreign capital inflows in India, of course, including other emerging markets as well. When the Fed raises rates, foreign investors may pull out money and pull money away really from emerging markets due to the higher rates in the US, and this may further boost the dollar.